why America is inputting some tariffs?
You want tariffs if there's an industry in your country that you're trying to protect.
What on earth is a tariff?
So like it's getting to dangerous, like we're playing with some things that can have some dangerous consequences.
What everyone actually wants to know, what does this mean for us? What does it mean for the world?
I can't make an argument that it's going to be positive. Like I think it's only going to be negative.
Just the entire world is just like, holy moly, our markets are going up, down, sideways, roller coastering around. It has been one of the most dramatic weeks in recent history across markets all over the world. Donald Trump is raining havoc across the global economy. This tariff war is huge news, and it could completely change the entire direction of where the property market is going. In this episode, I'm going to try and unpack what on earth is happening, why it's happening, and what it means for the Australian economy. I've got my whiz here, an ex-economist, a current economist, the smartest guy I know to talk it through with me. Kurt, how are you, man?
Pretty good. I like this trade war because of the time zone difference. It's like doesn't stress you out during the day. And then like you can check it and be like, all right, that's what it is. And then you wake up and it's like totally changed again.
Yeah, exactly. Like, you wouldn't... this is really funny. We were paying a payment out to a different country through the business, and the currency had fallen 5% one day, made the payment, and then it went up 3% the next day. I was like, what the hell? This actually changes the payments amount. It's like thousands of dollars when it's a large payment. It moves in and out. One of my friends just bought a property here in Australia from overseas, and he would have had to make like a large chunky payment into Australia. And if he did it in
a couple of days later,
120, yeah, it's just a completely different price, or it's 5% more. That's crazy. All inside the space of a day or two. Wild.
Things very, very rarely move this quickly. Like normally these like kind of trade policies, they never move. They move over decades, right? Like they get set, they barely ever move.
You worked in trade, didn't you?
Yeah, temporarily. Yeah. For 6 months on FTAs. Yeah, someone will negotiate an FTA like once every decade or something and move one number a tiny amount. Yeah.
And now it changes. Let's move this up. Let's come up with a new algebraic formula. Anyone who's been watching this will know what I mean by that. Yeah. And let's do some voodoo math and change it all around and be like, let's have some fun with it. Let's go. That country gets 10%. That country gets 30%. That country gets 100%. Yeah. It's wild. This is like crazy.
Yeah. What I like is back at Treasury, you know, we would spend so long fussing over like the draft legislation, right? So you come up with an idea, you send it off to the lawyers, they try put it like what's going to go into parliament, and now it's just like X basically. Like you don't need lawyers now like to get an updated draft. It's just like refresh X and see what the new policy is.
It is really, really entertaining. So for us here, anyone who's been watching our show for a long time, we are two property economics type nerds. So this is pretty much nirvana for us. It is exciting. We're in the middle of an election too. There's a lot of policy talk, a lot of just talk in general about all these cool economic ideas, which makes our evenings pretty entertaining. But Kurt, can you please explain to everyone what on earth is a tariff? And if you can, why America is inputting some tariffs, maybe some context around it.
Yeah. All right. Let's do the what is a tariff question first.
Yep.
I was thinking of a good example for this one. I'm going to choose a car because I think there's different countries and it's a nice, easy example to get our heads around. So cars don't get made in Australia anymore, basically. So it's a great example of something that we import. So if Australia were to put a tariff on a car, let's say Hyundai Australia import the Hyundai from Korea, right, where it's made. As it gets to the border, if there's a tariff, Australian Border Force basically will say, hey, thanks for shipping your car across. Hyundai Australia, you're the ones that are bringing the car into the country. You need to pay a 5% tariff or a 10% tariff or a 0% tariff, whatever it may be. You got to pay us the money and then we'll give you the container with the car in it and you can take it off to the showroom.
What? That's a bit mean.
It's paid by the person that imports it, not the person that exports it.
That's really funny because where I'm from, historically, it's known as the most corrupt country in the world, or one of the most corrupt countries in terms of indexes for corruption. Just sounds like that. It's like, come into the country. You want your package? Here's this extra 10% you have to pay for your package.
Exactly. And that's why everyone is trying to push to, free trade, because countries want equality. So if we're importing a Chrysler from America, that might have a different tariff rate on it than the Hyundai that comes in from Korea or the BMW that comes in from Europe. So that's why they're all trying to get themselves to as close to either the same rate or as zero. But technically, it's paid by whoever imports the good, and then they normally mark that up to the consumer in the country that pays for it. So in America's context, stuff comes over the border in America, be it a car, be it natural resources like wood, aluminium, toys like from China. Yeah, sheep. We don't really do live sheep exports. We don't like to do live sheep exports. But yeah, whatever they're importing from whoever they're importing it, it gets to the border. American border security will say, awesome, we've checked that it's whatever, disease-free or all the other checks they do. And then they go, and your bill is X based on your tariff. So if it comes from China tomorrow, who knows what it'll be, or maybe today, who knows what it'll be tomorrow. If it comes from China today, they might be like, you've brought in a $20,000 BYD worth $20K, your tariff bill is like $22,500 in addition to the actual car itself.
Cool. Yep.
Or you might bring in a car from Europe from BMW that's worth $50,000, and that could be a 10% tariff, and they say you owe us $5,000 before we'll take it off the boat and actually let it into the country, and then you can go sell it.
That's an awesome explainer, especially because it's so practical. And now I know exactly where it's applied and when it's applied. I didn't know any of that. It's pretty interesting because I think you have some family that works in customs and that actually puts on those little packet slips and things like that. So it would be involved in the tariff collection process in Australia. Australia's got some tariffs, right? Somewhere with some countries on some goods and services, I assume.
Yeah, you're testing my knowledge now. I think Australia actually has a general tariff of 5% maybe. And then unless you have a free trade agreement with us or you're part of some trade agreement, then it goes down to zero. But most countries have kind of some default tariff. But the second question you said was why would America do it? So
can I add one more thing to everyone there? It's so when this tax is collected by the Americans, they're getting money goes straight into the American government's coffers. Right?
Yes, but it's paid for by the American company that imports it.
Yes.
So yes, the government is collecting tax revenue, but it's not collecting tax revenue from the Korean. It's not collecting tax revenue from Hyundai Korea, who shipped the car. It's collecting tax revenue from Hyundai Detroit, who imported the car, if that makes sense. So it will be an American registered business that's paying the tax.
Yeah, makes sense. That's the implications of it. Awesome. Cool. So now that we've got through the minutiae of how our tariff is actually applied and what the tariff is and why they're doing it, let's circle it to what everyone actually wants to know. What does this mean for us? What does it mean for the world? It's pretty crazy because the way I describe it is there's two giant kingdoms out there. This simplifies it for me a little bit. I've got a 4-year-old and a 2-year-old, so I have to tell them bedtime stories every night, and it looks a little bit like this. There's a giant kingdom. This is what my bedtime story tonight. I'm practicing it in front of our live audience here, in front of our audience. And those two kingdoms used to, be harmonious with each other and be like, hey, you can have my this, you can have my sheep again, you can have my my wool or whatever it is. Man, I'm really into sheep today. But you can have my goods and services and we trade. But now there's a huge barrier going up between the two and being you can't bring in your stuff into my country. And likewise, the other kingdom, China in this case, to America is basically retaliatory, being you can't sell your stuff to my country either. That's kind of happening right now. But that has huge consequences to the rest of the world because these two giants that make up a huge, huge chunk of the global economy are being hey, let's go shoot ourselves in the foot. Yeah. Let's pick a huge, huge fight. And Australia, little old Australia just gets punched in the face through it all. And it's not Australia, but everyone gets punched in the face. All the Africans out there, all those African countries, all the European countries, just the entire world is just holy moly, our markets are going up, down, sideways, roller coastering around, our businesses are roller coastering around. Our dollars roller coastering around. We can't actually run a business in these sort of conditions when we don't know what tomorrow is like.
Exactly. Yeah. So I think
that's scary.
Maybe to give people a little bit of context, the two reasons why you probably would want tariffs. So if you're America, I class it into two categories. You want tariffs if there's an industry in your country that you're trying to protect. So,
Yes.
for example, if America's manufacturing steel in America versus importing steel from China, if you put a tariff on the Chinese steel that comes in, it makes your local industry a little bit more competitive. That is more of like a medium-term, long-term play, because like when you switch a tariff on, nothing changes overnight. People have to ramp up production. So you're like thinking well into the future, being like, hey, I want to build up America's whatever it may be, manufacturing base in something. Therefore, I'm going to put some tariffs on it to help the American industry be more competitive relative to the rest of the world that's cheaper.
Yes.
Which I think is what Trump is maybe trying to sell it as. But then there's the second camp, which I think this might be more in, which is more purely transactional, which is like I'm taking a hit. I'm basically throwing a swing at China in this case.
Yes.
I'm causing them a massive problem because they export a lot of stuff to America. And then I'm dangling the carrot of if you give me something in return, then I will remove this big problem for you that I literally just put there a day ago.
Yes.
So more transactional about trying to get something out of it than like a long-term plan of like, oh, I really want to make sure iPhones are manufactured in America, not China. So I've got a 10-year plan to put some tariffs in to make it happen. To me, it feels like a little bit more transactional, like, hey, I'm just going to create a massive problem for you and I'm the one who can fix it. And I just want a transactional payment from you, basically. Yeah, they're kind of the two camps you can be in.
Yeah, pretty crazy. So that is all happening. But really, when I think of property, I always think of the word noise.
Yes.
And this is just exciting noise. It's like music around property going. "Ugh." How does this impact the Australian economy? And I say Australian economy because I feel like that is the
Direct,
consequence to Australian property. Australian property is not really correlated with
Tariffs.
tariffs or what's happening in and around the world very much directly. It's correlated with other things, and more importantly, the Australian economy. So what does this mean for the Australian economy?
Yeah, it depends how badly this goes for the Chinese economy and the global economy. So basically we're playing with fire now. No one's actually really gotten burnt yet because it's like, whatever, we're 48 hours in. Nothing that bad can happen. Things move slow. But we're now starting to like play around with fire. Stick your hand in, take it out. Stick your hand in, take it out. See what happens. So like it's getting to dangerous. Like we're playing with some things that can have some dangerous consequences. So, but in order for the Australian economy to be impacted, it's a secondary effect, right? So if China and America have a massive, massive trade war and their economies tank as a result, so whether it be the Chinese economy go backwards or the American economy go backwards, or both of them go backwards in any significant way, that can have a big impact on global demand and create basically a bit of a global recession. And then we get the flow down impact of that. And depending on how bad that is, if it's some mild little recession where some things move around, Australia's track record's pretty good at being fairly insulated from that and finding a way through it.
Yep.
But if it all goes like incredibly badly, then as a small open economy, you're just kind of swept up in the tide. Like there's not much you can do.
Yes, that's true. But let's unpack. So that's the broad, really macro context.
Yeah. So if we go property markets.
Yeah, but let's go a little bit deeper into the economic impact there and be like, I actually think it gets a little bit more nuanced given you're talking about you're talking about products we sell and services that we sell to certain countries. And China, in this case, where we are right now when we're recording, is the globe. Most countries have a 10% tariff on them, and China's going to be hit with something 10
125, I think they're at.
Some huge amount that changes every hour, right?
Yeah.
But the idea is China and America are the two kingdoms that are at war, at economic war, so to speak, with each other at the moment, and trying to come up with a solution at some point between each other or not. Australia's largest trading partner is China. China will slow down if this continues and they do not come up with a resolution. In the absence of this, all else equal, this is a pretty dramatic slowdown for China. Now, China is an economy that produces lots of things for the world. Probably this chair that I'm sitting on, maybe even this microphone. Everything I'm looking at probably comes from China in some degree. Like that's just what they do.
Yep.
They build things for the world and then they export it. The world's biggest buyer has just said, I'm not buying your stuff anymore.
Yeah.
They have 1 billion people or 1.5 billion people, whatever it is, that build so many things every single day. And then out of nowhere, someone who takes up, a huge chunk, let's call it a quarter of all the things that they actually buy, just say, no, you can't sell it anymore.
Yep.
Your BYD can't come into America. Your little plastic toys can't come into Australia. Your tables, your furniture, everything. You cannot bring it into America right now. So all of these Chinese factories, all these Chinese businesses out there that go and sell stuff to the world, which is pretty much what they do.
Yep.
They make things to sell to the
Had an
world.
overnight massive reduction in demand, basically, for the goods that they produce.
Yes. Huge reduction in demand, which changes the price in which they can sell their things for. But they haven't had a corresponding decrease in supply. So there's a stockpile that's going to be building. It's like day one, we're 48 hours in and it's just like, oh, this table's full of stuff.
Yeah.
Soon it's going to be this room and then soon it's going to be this suburb.
Yep.
There's going to be stuff everywhere in China where it's just like, where do we get rid of this stuff? Doesn't that just make the BYD price here come in and be like, I'll buy your BYD for a 50% discount?
Yeah.
Like, isn't that what's going to happen to the world?
Yeah, which is why like the EU and so many countries are like trying to tighten up their anti-dumping provisions because yes, that's probably like one of the results is China is going to need to sell these somewhere, even if it's at a loss. Yeah,
Isn't dumping great for us?
Can be good for consumers. Like for cars, when it's an industry that we don't actually manufacture anything ourselves. Yeah,
we don't have a manufacturing base here. China is
exactly.
our manufacturer.
Yeah,
China
yeah.
is Australia's manufacturer. Like, that's what's happening.
But like,
to the world.
Europe are worried about that because they build a lot of cars there. So they're like, cool, if all these Chinese cars
That's
come
so
in
good.
at a 70% discount, then...
Right. So the key takeaway to the audience here is, if you're thinking about buying a Chinese car, wait.
Yeah.
Wait, there's going to
Give
be
it
a
3
lot
months.
of them.
Yeah.
I might get in trouble for this podcast now. I'm a bit afraid I said that. But like, I'm playing the economics out here, being like, they're just going to be stockpiling a whole bunch of stuff. Like, I'm going to tell my daughter she can't have a plastic $10 toy because it's going to be $3 tomorrow.
Yeah. But then for the Chinese economy, that means they're getting less for those goods. So
they're screwed.
They're a little bit screwed. And then they're like, when you flow that on, they're making less money on what they produce.
Yes.
So they've got less demand and less...
They can't buy our stuff.
Exactly. They can't buy our stuff. And that's where the flow on effect comes back to the Australian economy and how it can impact us.
Yes. Again, let's play this out here. So I'm trying to understand the consequences to Australia here. Now, the main consequence to Australia here isn't from the tariff that's being applied to Australia. Americans are going to buy slightly less of our stuff, but they're not slightly less.
And even then, if everyone's got a 10% tariff, they buy the same amount.
Yes,
basically.
but they might shift to domestic producers a bit more. Like
so it'll be so marginal, yes.
Very, very marginal impact from the small little tariff America's got on us. So that's not the impact. All of our impacts are associated with what happens in China here, and what happens in China is associated with their negotiation or whatever's going on with America. But the more interesting point here is, if they have all of this glut of goods and services, and we're a small open economy that will buy stuff and that doesn't have any like blockages to our free trade sort of arrangements. We're just like, let's trade with countries. We're not, changing our approach here. There's no geopolitical change here.
Yeah.
We're not saying anything to China. We're like, hey, we'll buy your stuff from China. There's no change there. So we'll keep buying the stuff from China and they're going to have more of them. So it's going to reduce the price there. There's a second impact where you said that China cannot buy our stuff, but China buys certain things from us.
Yeah.
We don't have that many things that go out to them, like our export market.
Yeah, natural resources, iron ore,
And to a smaller degree now, much smaller degree actually, we keep pivoting. This is what Australia's so good at. Like, China, you don't want to buy our beef, you don't want to buy our wine. That's what happened under the ScoMo government. Being like, you don't want to buy our stuff, our barley, whatever it is. Being like, we sold more of that stuff to the rest of the world. Like, barely impacted us at all. Like, all these manufacturers just been like, sweet, we've got lots of this. We have the best. Like, we can sell this to anyone. Like, that's pretty clear here. The main one is with our mining resources.
Yes.
Now, China is about to go through a massive slowdown if this happens. The person or how China has been buying so much of our stuff has been associated with the government being like, I need to build things and I need to make this economy sing and work. And just like Australia does, we cut interest rates, we start building things, we come up with things like home builder times 10 repeatedly every time. We start building our way out of it and we start bringing in more people. That's Australia's solution. China's previous solution has been to build more things, which requires iron ore. So if I'm running the Chinese government here, I obviously have they've changed their background, they've changed their economic strategy to be a very consumer-led sort of
which
growth
is probably
strategy.
where they need to go. Yeah,
Which is where they need to go, right? And they'll need it because they're going to have so many things that the consumers need to buy.
Yep.
Being like, do you want a car? 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 Chinese government's going to be Oprah soon being like, all the Chinese people get a BYD.
Yeah.
That's going to be their solution for $2,000 or something like that. They're going to have to get their people to go buy things, and their people might be like, okay, I'm buying everything cheap. I might not have a job because we keep stockpiling and then you got no one to sell it to. But Australia's consequence is they'll stop buying our iron ore. This is the one where I'm like, actually, will they? Or will they end up having to buy more of it? And if they're not buying our iron ore, will someone else be buying our iron ore? The global change to minerals and our mining sector and the obvious drop in prices, the price should drop where this happens, should have some flow-on consequences to Australia. What do you think? Like, play this out for me.
Yeah, I don't really see the circumstance or the argument where they buy more. I think in this kind of arrangement where America and China have a trade war with each other, I can only see there being a overall reduction in global demand, basically, for everything. And then it's just about, okay, well, if it's mineral sector or if it's iron ore, like what do we sell to the people who are having the biggest reduction in demand, which is probably going to be China and America, right?
Yes.
So I think I can't make an argument that it's going to be positive. Like, I think it's only going to be negative, but it's just a question of how much. And then, like you say, it is going to be different sector by sector.
Yes.
Because if we're selling wine to Europe, that's going to probably have a much lower fall in demand and price than if we're selling, I think, iron ore to China, who might be way more directly affected by a trade war.
Yes. Okay. So I gave it a shot, everyone. I was like, can
this be
good for Australia? Just like, no, the smarty pants is just like, nope, it cannot. And the expression that, I don't know whether it's a policymaker expression, but, when China catches a cold, Australia sneezes, or when China sneezes, we catch a cold, or some version of that, or it's just like Australia's going to feel the negative consequences of a Chinese slowdown. And if the global economy slows down and goes into a recession, the biggest slowdown of that, the biggest drag of that is weighted by China slowing down.
Yeah.
Right?
Which is our biggest trading partner. Yeah.
Yes.
But I think there's another argument too, which is because this is all looking at, okay, what if there's some big global recession that plays out over the next 12, 18 months, right? But the way that these things move, I think there's another argument, which is like these tariffs might all be gone, or like this might all be resolved like before the end of the financial year, basically.
Yes.
At the speed that these things move. So there could be a circumstance where we're potentially talking about, I think the biggest thing for property would be rate cuts. So central banks around the world might be a little bit...
We waited 23 minutes to get there.
Yeah.
Everyone, we waited 23 minutes to get there, and we said it here. Interest rate cuts are coming. They are coming. They are bigger. They are larger. They are going to change everything, and that really is the point of all of this. All of its noise. What isn't noise is the interest rate you pay on your mortgages, the borrowing power that you get when you go and apply for a loan. That ain't noise. That is real. It impacts exactly what goes into your back pocket every single month, and that is the main change for Australian property.
And they're cutting rates faster and probably bigger numbers and faster because of the uncertainty.
Yes.
So there could be a bit of a Goldilocks scenario that's possible in the property market where we get faster rate cuts because the RBA and central banks all around the world don't know how this trade war is going to be resolved. So you start to err on the side of like, all right, let's give the economy some support and people some support because this could go bad. But you might have rate cuts that come in over the next couple of months. But you could get to July and all of this trade war is all magically resolved and Donald Trump and China decide that they're not at war with each other anymore and whatever has happened, but we kind of landed in a very, very similar to scenario, a very, very similar place to what we had like in February, if that makes sense. But you might have 100 bips or like maybe not 100 bips, but you might have 50 bips or 75 bips of rate cuts that have come in. But the material outlook for the world is kind of back where it was, and it was all a storm in a teacup.
See, when I play this out, I actually think I'm going a bit further and being like, let's just assume that they have a prolonged negotiation for a little bit and it doesn't end too favorably, and both of them take a pretty material hit through this process. Again, playing all of the consequences out for Australia. Australia's growth will come down. We're going to be swept up in the global story.
Yeah.
There. I think we're going to be more resilient than we might think.
And it depends how big the hit they take is, because we're one layer removed, right?
Yes.
So we've got a little bit of insulation. We head down, but like we don't head down by the same amount.
Yes. I think we're going to head down. I think
yeah.
that's going to happen. Associated with, we have different levers we can pull, right? So lever one, we cut interest rates to support our economy, support the housing market, support construction activity, and rebalance activity to domestic-based sort of activities that happen each time. We probably have more room for fiscal support because of the state of our budget and a fairly healthy budget balance compared to the rest of the world. We have a lot of actual things that Australia can benefit from here as well, from lower prices of goods that come in from China, that come in freely into our country, cheaper cars, etc., whatever it is. We're getting even cheaper stuff. Kmart's going to be a big winner, being like, I think most things from there are like made in China. Every time I go there, being like, it's going to be like, sweet. It's going to be every store's going to look like Kmart soon. They're very cheap, so it's going to be like, cool. You can buy lots of stuff. That helps the Australian consumer. Inflation comes down, growth comes down, unemployment goes up, all from forecasts. But this is the part that I'm like, why? In that set of circumstances, inflation's already at 2.5%. Like we're already in the midpoint of the band, right? Unemployment is already beginning to rise a very, very healthy level where we're at, but it clearly suggests that Australia can absorb a 4% unemployment rate. It isn't unemployment that's driving inflation.
Yeah, correct.
There's no wage growth issue. Growth was rising again this year, but it's going to come back down a little bit. Why do we have interest rates that are tight? Doesn't make sense. So I do think there's big rate cuts coming. Like if I'm sitting here, it's mid-April. I really thought they should have cut rates last month. Like before all of this. I don't understand why you haven't cut rates. They've only just shot themselves in the foot a little bit because they said that they don't want to be too aggressive with rate cuts. Yeah, so they didn't cut rates, but then the data that came out over the month being like, oh, shiza, we probably should cut rates, but we don't want to because we said we won't, so we'll do it in May. Right? So the May rate cut, I would have put in, that's going to happen. Now they might do 2 rate cuts and then back it up with June and July. I actually think a lot of that may have happened without the trade war. Like without the trade war, without all the noise, we probably would have had just new noise, just new information that's come out over the last 6 weeks.
I think it just would have been slower.
Yes.
I think it would have played out over more RBA meetings than potentially now. Yeah.
Exactly, right? But then you have all of this being like, why would you have interest rates? Why wouldn't you have interest rates well into the easing bias version? That's what I'd be doing. It makes sense. Like, I just feel like markets and everyone has got anchor bias by the RBA. The RBA have anchor bias, right? Everyone's always had anchor bias, especially economists. They love anchoring to everything, right? So how the RBA work, it's how all the economists work. They anchor, and then it's step change, being like, oh, cool, let's re-anchor, if that makes sense. But should there be a complete re-anchoring to be like, we need to have an obvious easing bias. We need to support the economy. It shouldn't be neutral. We shouldn't just let the economy just coast. We should be like being like, turbo boost economy, go, go, go. How do we do that? Like, isn't that cut interest rates to an obvious easing bias level?
Yeah, but I think that's what people are talking about now. Like when you're talking about 50 bip cuts in one RBA meeting, that is not like it's not really emergency cuts, but that's like, okay, we need to quickly rebalance where interest rates are set. Whereas I think pre this, it was more of a we will slowly rebalance where interest rates are set. Exactly.
There's no emergency need to change interest rates around.
Exactly.
Yes.
But yeah, if there's a prolonged trade dispute with the US and China, then yes, an easing bias is almost certainly going to be where it lands.
Yes.
But I think the thing I'm thinking about is there a circumstance where we get through this with where the Australian economy and unemployment take a bit of a hit, but not a disaster, But we still get the step change in interest rates of, 100, 150 bips, which is very material, right? We have a
Yes.
very, very material change in interest rates, and we only have a slight slowdown in GDP growth and a slight increase in unemployment.
Yes.
Because if that's where it lands, like that has a very different
Do you want to say
outcome for
Do you want to say it? I'm going to say it. I'm going to say kaboom.
Kaboom. Sure.
That's what that is. That's kaboom for property markets.
Yeah.
Like, let's just unpack that very simply. If unemployment stays with a 4 handle,
Yeah.
if interest rates get cut by 150 basis points, and a lot of the markets are
Yeah.
now predicting that over the course of the next 12 months, after interest rates are going to be 4.25%. That you might have fixed rates that start with a 3.
399s. Yeah.
Yeah. So everyone, I think a fixed rate with a 499 is going to be in our marketplace, maybe even by the time we publish, within 3 or 4 months, within the 3 or 4 weeks, some of these banks are going to be like, cool, I'm buying my bonds much cheaper. Let's pass this on. 4.99% interest rates are going to be here. But with all these rate cuts, that could be too high too. It could be like 3.99% is coming. That's kaboom territory. That should be a huge change in property markets because, like some of my properties, even in Sydney, I get yields like that. Melbourne property yields.
Yeah,
are all right.
exactly.
We'll
That
go through that
totally
on a separate
rebalances
podcast,
it. But yeah, if the economic performance and unemployment hold together and the RBA is cutting rates because of it's probably more the unemployment number, to be honest. If unemployment holds together and the RBA is cutting rates, making big cuts to rates in order to support GDP and inflation numbers, because they're both really, really soft as a result of a trade war, then I think for property markets, like you say, that's a bit of a kaboom situation where the Australian population has taken a little bit of a hit,
Yes.
but isn't drastically affected by this. But there's been a material step change in interest rates where interest rates have been, almost halved.
Yes.
Um,
There you heard it. Curtis used the word kaboom. That's as excited as I can get him. So that was pretty cool. That's all I heard there. Curtis, you said kaboom. Everyone, I'm going to make a little short on our Instagram. Curtis said kaboom. Cool. Let's leave it there for this one. But we're going to do a part 2 to this episode. This level of change is so large that it actually is worth unpacking state by state, location by location, to work out how different property markets are going to actually change from this big global change that has happened. In this episode, we kind of went through exactly what has happened, why, went through what could happen to China, what could happen to America. There's a little bit of a geopolitical discussion. We got Curtis to spread his opinion about what could happen here and there based on all the noise that's happening right now. But the underlying message I want to leave with you is you might be sitting there feeling a little bit fearful, feeling a little bit scared, being like, oh no, all of this is happening. Maybe I should just sit and watch and wait. The message I have for you, in my experience with property, is that is almost always the best time to buy property. When your fellow person is sitting there waiting for that little cuddle. Everyone's just waiting there for a little cuddle right now, being like, hey, I feel safe again. Once people feel safe again in an environment where these rate cuts happen, then markets are going to do very well, but you're going to be competing with so many people who've just got their little cuddle and they're just like, I'm ready to go and buy. So while everyone is sitting there waiting on their hands, you can probably relate to recent history with COVID and certain circumstances that happened afterwards, that we could be entering a little bit of a golden period for property markets right now. And that fear that you have could easily be turned into understanding that this could be a great opportunity too. And this is probably across different asset classes too. As of the day of recording, stock markets went down like a lot and then rose back up a huge amount. There's people making a lot of money in stock markets right now because they're sensing opportunity in an environment of fear. That's what I want to leave you with. Until the next one.